This lesson will teach you how to exercise options and adjust stock assignments. It is important to note that brokers do not properly identify exercised options in their transaction history. They are only required to show the stock assignment at the set price. This can cause much confusion when filing your taxes. TradeLog shows 14 option contracts that are open in the data file. If we select the Open button on our toolbar, we can examine these options more closely. Since we have imported up to September the 14th, it may appear that our first option has expired, but this is not the case as it was exercised. In fact, all of these options have been exercised and should not be showing as open. We strongly recommend checking your open positions after every import. This is especially true if you are an options trader who has frequent expirations or exercised contracts. You must be prepared to distinguish the difference between these two adjustments. For our example, we will consider 4 IRS rules for exercising put and call options. First, let's consider the put option. Note our ACI put option is a short sale. Therefore, we are the writer of the option. This means we have to reduce the basis in the stock we bought by the amount we received for the put. In other words, the put option's proceeds will be subtracted from the basis of the stock. To start, select the sale of the option and the buy transaction of the stock. Hold the Control key on your keyboard to select more than one record at a time. Once the records are selected, let go of the Control key. Now select the Edit Exercise Assign menu item. Click Yes to exercise the option. Click Yes again to save your records. TradeLog has just performed 3 adjustments with one easy-to-use function. First, it has properly identified the exercised option and matched both the option and stock. Second, it has zeroed out the option so that there is no profit or loss. Also, there are no contracts showing as open. Third, our cost basis has been reduced from the original amount of $15,500 to $14,165.51, the difference of $1,334.49. In the next situation, a MER put option was bought. Therefore, we are the holder of the option. This means we have to reduce the proceeds in the stock we sold by the cost of the put. This time we will select the option we bought and the sell of the stock. Remember to hold the Control key on your keyboard to select more than one record at a time. For the rest of the lesson, we will use the keyboard shortcut for the exercise assign function, which is Control+E. Click Yes to exercise the option. Click Yes again to save your records. Again, the option has been identified and closed. Also, the sale has been reduced from $2,700 to $2,577.56, a difference of $122.44. Now we will consider the call option. Let's examine a shorted TSO call option that was exercised. For proper adjustment, we need to increase the sale of the stock by the amount received for the call option. In other words, the call option's proceeds will be added to the sale of the stock. We will use the same method as before and select the records to adjust along with running the exercise assign function. This time, our stock sale has increased by $98.29. In our final example, a TSO call option was bought and exercised. This means the cost of the call option gets added to the basis of the stock. Please always remember to click Yes to save your records. Exercising options may seem like a waste of time, and many traders can't see the benefits for tax purposes. However, it is good to note that options that are exercised do not get reported on the IRS Schedule D, so they should not be closed at a price higher or lower than their value. This is the mistake that most traders make. Let's examine our year-to-date gain and losses report and the proper way to file exercised options. Notice the options exercised are not listed. Also, the amounts have been adjusted accordingly to properly calculate our gain. Now let's review exercising options. 1. Remember to carefully check your open positions before expiring options. They may need to be exercised instead. 2. When exercising shorted put options, choose the option and the buy of the stock. 3. When exercising long put options, choose the option and the sell of the stock. 4. When exercising shorted call options, choose the option and the sell of the stock. And 5. When exercising long call options, choose the option and the buy of the stock. If you are still unsure about these rules, just remember to select the option and the stock with the set price. In other words, choose the stock bought or sold at the strike price of the option exercise. If you do this, TradeLog will know which IRS rules to apply as discussed in this tutorial. Please continue on to the next lesson.